With US Federal Reserve cutting its rates for the first time in 4 years and geopolitical risks surrounding the globe, what to expect? To answer all these questions, we have here with us Dhiraj Relli, who is the MD and CEO of HDFC Securities. Hello, sir. Pleasure to have you here.
Thank you for having me.
Sir, I want to start by asking you that US has already cut the rates. Now there are speculations that the Indian markets and the Indian RBI will also go for that. So what effect can the Indian markets expect on this respect?
I think we have been operating in the higher interest rates cycles for quite some time now. And at the end of the tunnel, as we see the light, we've seen that some rate cuts are coming up, and Fed has cut 50 rates by 50 basis point. Interest rates remain at an elevated level across the world, barring few geographies, particularly in India also. And I think there is a need for a rate cuts in India, but it will be data driven, and RBI with the change in the monetary policy, monetary committee also, so they are looking forward at the data very closely. I think in India rate cuts will take some time. Inflation have been stubborn and still on elevated levels. So unless until we have a clear direction on the inflation side, I think the interest rates cuts in India will take some more time.
Okay. If it were to happen, what are the sectors which will have a positive impact by this, and which are the sectors which will face sort of a backlash from the rate cuts?
I think whenever interest rate cuts happen, all those industries that are borrowing big time, they get the tailwinds because their borrowing cost comes down, and that's how they increase their margin, and it is across the industries. But largely, if you see the auto sector and particularly real estate sector, who are more interest rate sensitive sectors, that's where we see positive impact. FMCG companies generally do not borrow, IT companies do not borrow, so they have a limited dependence on the borrowing capital, so that's where we will see a very limited impact. Interest rates have increased significantly, borrowing costs have gone up, so banking and financial services per se have been facing the NIM compression challenges for quite some time. It's not easy to pass on the entire borrowing cost to the investors because it's a very competitive market, and particularly non-banking financial services companies, they are largely dependent on the leverage, so that's where they've got their borrowing costs have gone up significantly. If interest rate cuts to happen, which will happen in due course with some lag, I think these are the sectors who will be the direct beneficiaries.
Okay. And what can companies expect with respect to capacity utilization?
I think the heavy lifting in the capex side has always been done in last few years by the government, and it's high time that we see private sector capex coming up. The capacity utilization of late in last 1 year or so have increased from 70 odd levels to close to 80 levels. The promoters, whenever they see the decisive demand visible and also reach a capacity utilization of 80% plus minus, that's when they start putting in more capex, and in the hope of looking for the opportunity. We are at the cusp of private sector capex now.
So we can expect it.
Absolutely. We are seeing the green shoots in private sector capex.
Okay. With geopolitical risks around us, where can you see that, where does the oil go?
I think it's been quite surprising that despite we are having a significant geopolitical issues, we are still seeing the crude prices not going up and remaining at a more or less plus minus $80 a barrel kind of levels only, and they are lower now. So I think it's attributed to the 2-3 large themes. One, that the demand has come down from certain geographies like China, though in India demand for the crude have been steady, but overall demand has been just about in a very low single digit 1-2% level only. So that's one aspect of it. There has been a significant attempt by almost all the economies on energy transition to green energy, hydrogen energy, and that's where the long-term perspective, long-term wise, crude is looking more reasonable. And as and when prices go up, we see more production coming in from the US, and shale gas players also have their own pace. So to that extent, I think it's somewhere at a managed level only. I don't see, unless until we see a significant escalations in a geopolitical events or war, then probably crude prices will go up. Otherwise, they'll remain in the range bound.
All right. So, my last question to you is that with China's stimulus, what do you see can be the effects on the commodity market?
I think China markets were struggling for quite some time, particularly on the stock market space. And of late, they have announced many measures to correct the capital market ecosystem and overall economy. Uh, this is where they are hoping that the demand will increase. As and when we will see a ramp up in the demand from China, I think that will have a pressure on the commodity prices. They are one of the largest consumers. So that's where it is. Let's see. We'll have to wait and watch.
All right. Thank you so much, Dheeraj. Thank you for
Thank
those
you.
insights. Thank you.